This video will either surprise or shock you because I will answer how big is Indian equity market today and how big it can be in future. No doubt this will be very educational and informative video, but the primary objective is to help you expand your thoughts on understanding the equity market and what is the underlying opportunity that we have. By the time you complete watching this video, I am very sure either you will take your investment journey seriously or you will completely pull out yourself from the equity market. I'm very sure that many of your friends who have invested and who are trading, you might have come across them. And I'm also sure that you will come across several news articles which are talking about mutual funds, so on and so forth. But if that is an intention and that is a primary reason for you to get into the Indian market, then let me tell you, my friends, that market is very brutal because it can completely wipe away all your wealth if that is the reason for you to get into the market. But if the reason is something else, which I will talk in this video, then market can be equally friendly and reward you like anything beyond your imagination. So with that note, let's get started with this video. Chapter 1. How big is Indian equity market? Now in India, there are more than 2000 companies which are listed and public companies. And the market capitalization of all these companies is $3.5 trillion. Now what is market capitalization? Let's try to understand that at first. So as an example over here, Adani Enterprises comes up. Adani Enterprises is a public company. It has, say for a simplicity, it has 1000 shares listed and the prevailing price at which it is being traded is, for an example, 50. So the market capitalization of Adani Enterprises, this company on standalone basis, is somewhere around 50,000. This is a market cap of Adani. Likewise, there are 2000 plus different companies, each having their different market capitalization. So collectively, taking a sum of all these 2000 companies, India's current market capitalization is $3.5 trillion. Now, how big is $3.5 trillion? It is greater than Europe's two biggest stock markets in UK and France. India ranks 5th after USA, China, Japan and Hong Kong in terms of market cap. Now, this achievement of $3.5 trillion was not a linear curve. Certainly, India economy has faced several plunges in past and economy is effectively able to overcome it. Now, if we see, there are more than 190 countries and 60 plus stock exchanges in world, and India stands 5th in rank. So you can easily gauge by yourself how big is Indian economy. Now let's try to understand what this number $3.5 trillion resides and how much 1 trillion is. Because unless we understand the potential and the math behind this number, we will not be able to realize the opportunity that we have. So if we decode this 1 trillion, the math goes something like this. So let's say an average Indian salary of ours is somewhere around 50,000 per month. If we factor it for the entire year, then our salary comes somewhere around 6 lakh per year. Now, how much is 1 lakh corresponding? 1 lakh corresponds to 100,000 rupees. Likewise, 100 lakh corresponds to 1 crore. Likewise, 100 crore would correspond to 1 billion. And then 1000 billion would correspond to 1 trillion. And if I multiply this by 3.5 times of that would be 3.5 trillion. This is in Indian rupee. The Indian economy is 3.5 trillion USD and not 3.5 trillion rupee. So if we multiply the conversion of USD to Indian rupee, so if we multiply this 3.5 by a rational number of 82 as a conversion rate, then the Indian economy valuation comes at somewhere around 287 trillion rupee. Now, our salary is 6 lakh, which is like a penny in the ocean, and the ocean might be 10 times bigger than what we are. That's why it is very important to understand that whatever we invest is a very small amount compared to what is available in the economy, and it can be way bigger than we think. If we take a giant fish of India, which is Reliance Enterprises, and look at the valuation of it, the market cap of Reliance alone is 18 lakh crore. I mean, kya hi bolenge? The average salary of 18 lakh would make us super duper happy. Now if we see, on one single day, the traded value of Reliance is somewhere around 3,397 crore. So if we divide this by 6 hours for which the market is open and then by minutes, in 1 minute, approximately 9.5 crore was transacted in the market only behind one company. So by the time you complete watching this video, somewhere around 90 crore plus worth of shares are traded only behind Reliance. Now again, this data is only for one day, is only in fact for half a day and only for one company. You can very well gauge by now how big is Indian equity market. Despite this, the question comes that we know Indian market is big by now, but what would happen if we don't be a part of it? So for that, let's take a use case of top 5 companies from Nifty. Now what is Nifty? Nifty is an index of top 50 listed companies. So we will consider top 5 companies such as TCS, Infosys, Kotak Bank, HDFC and Reliance, and we will consider the returns that they have given. So starting with, if you see over here, I am considering 10 lakh of investment that you would otherwise do in fixed deposit. Have you decided not to invest in the market and use that opportunity? Your return cumulatively would be somewhere around 20 lakh after 10 years of time frame. Now the inflation in India is somewhere around 4.8%. That same 10 lakh worth after 10 years, considering this 4.8 or 5% of return, will be 16 lakh. Because your return was 20 lakh, that's why you earned somewhere around as a net final return of 4 lakh. So 20 lakh was a return that you got from fixed deposit. 10 lakh in a way, 20 lakh was the total maturity amount. 10 lakh is your return that you got from fixed deposit. 6 lakh out of that is wiped out because of inflation. Your net real return in your hand after 10 years is only 4 lakh. This is equal to only 40% return in 10 years. Vis-a-vis, if we look at the return of top 5 companies of Nifty, which it has given in last 10 years. So as an example, the first one over here, TCS has given a return of close to 442% in last 10 years period from 2013 till 2023. Likewise, Reliance has given a return of 555%. Infosys has given a return of 357%. And Kotak has given a return of 471. And then Nifty collectively as an index has given a return of 228%, which you can see over here in last 10 years period. This is what you get as a result. So fixed deposit gave a return of 100%. Your 10 lakh capital become 20 lakh as we saw at a 7% interest rate. But because of inflation, 60% was wiped out. Your net return was 40%. And after 10 years, what you have in your saving as a return on your 10 lakh is only 4 lakh. Likewise, we compare this thing with top 5 companies, it's TCS, HDFC, Reliance, Infosys and Kotak, and as well as index to that matter. So collectively, if we see, TCS will give you a net return after inflation of 38 lakh, HDFC 19, Reliance 49, Infosys 29, Kotak 41 lakh, which is almost 8 to 10 times higher than the return that you will get from fixed deposit. If we leave these top 5 companies, if you happen to invest only in index funds, only in indexes such as Nifty, your return is 168%, that is approximately 16 lakh. This comes as an average of 16.8% CAGR return that you might get. Definitely not 16, somewhere around 13% of CAGR return that you would get, but in absolute terms, you get a return of 16 lakh on your invested capital of 10 lakh, which is 4 times of what you would get if you decide not to be a part of this growing economy. That means you completely erode your wealth and your wealth become 1/4 in next 10 years. And this is the reason, my friends, why you should consider investing, and not because your friends are into trading or there are media houses and news channels which are talking about investing. This is the rationale behind how big is Indian economy at present. Now let's move on to chapter number 2, understanding how big it can be in future. The question that might come to your mind is, Indian economy has already grown so much, does it even have a potential to grow further? The answer is very much possible. So what we saw in the market cap of $3.5 trillion, that is half of the information. So if we compare Indian economy as compared to a developed economy such as USA, as you can see over here, Indian economy is 1/10 of a developed country. That means if we become a developed nation, we hold the possibility of growing 10 times further from here. So if you look at this data, if we go 10-15 years back, in 2010, India's market capitalization or India's GDP, we can say, was somewhere around $1.6 trillion. So in 13 years of span, the market capitalization has doubled to $3.2, $3.5 trillion. Now, if we see this in a context of Nifty, Nifty from 2010 has grown almost 3 times, whereas Reliance has grown by 500%. So as a summary, when GDP of the economy grows by 2 times, which it will be very likely, there are analyst data which you can see over here, by 2030, India could become the third largest economy. So if the GDP grows 2 times, Nifty has seen a growth of 3 times and companies have seen a growth of 5 times. So if we rationalize this, that is a return of approximately 38% of CAGR return that you can have by investing in the equity market. Certainly, there is no recommendation behind investing in Reliance, or there is no view that always you will get a return of 38%. But the gist of my conversation over here is you should be part of this growing economy. To augment our understanding further as to what extent India can further grow, let's compare the GDP per capita of India with developed countries. So you can see over here, I have pulled out a GDP per capita of India. So what is the meaning of GDP per capita? At first, understand that GDP stands for gross domestic production of India. So that means in India, the current production outcome of the GDP is, let's say, an example of 1000 crore, and there are 100 people working. That means the contribution by every individual is close to 10 rupees, 10 crore by a fraction of that. So 10 rupee is contributed by every individual in the total production output of India. Thus, likewise, if we see the data for India, the GDP per capita of India as of 2022 is close to $2,388. But whereas if we compare that with USA, the GDP per capita of USA or Canada to that matter is, USA is $76,000. So that is almost 20 times contribution by every individual in USA. If we go back historically and take this data from the period of 1960, again I am repeating, in 2023-22, the GDP per capita of India is close to $2,000. Now, if we see in the period of 1960, USA per capita in the period of 1960 is close to $3,000. So the GDP per capita of India as of 2022 is equal to GDP per capita of USA as of 1960. So we can say that compared to USA, India is 80 years behind its growth. So that's why we sense that Indian economy has a long way to grow. And in fact, the GDP per capita of USA is 20 times higher than that of India. If you have liked this content and want to receive more of that, consider subscribing my handle and hit the bell icon, and as well as like this video and share this with your friends and colleagues. And I would urge to have such kind of discussion with your friends and family members. So as a conclusion of this video, there are two things that we got to know: how deep and how big is Indian equity market as of today, and what kind of potential it holds as to where it will be in future. This is Ajinkya signing off. See you in the next video.